What is an FHA loan? A Federal Housing Administration or FHA loan is a government-backed mortgage issued by private lenders and insured by the Federal Housing Administration. These lenders could be banks, non-bank entities or credit unions approved by the FHA to issue such loans. FHA loans are designed for people unable to meet up to the requirements of private lenders due to poor credit history, credit score, and other financial problems. The loans offered are insured, which protects the lenders, thereby giving the borrowers access to home loans they wouldn't otherwise be qualified for. This also makes lenders more willing to offer favorable terms to these borrowers. How do FHA loans work? FHA loans are best known for their flexibility, allowing homeowners to access other options in the event of unexpected circumstances that impair their ability to pay their mortgage and help them prevent foreclosure. However, borrowers must pay FHA mortgage insurance, which protects the lender from a loss if the borrower defaults on the loan. In simpler words, with an FHA loan, the FHA won't actually offer you money for a mortgage, rather you would have to apply for a loan from an FHA-approved lender like a credit union, bank, or any financial institution. The FHA would guarantee the loan, ensuring that you get better rates. All FHA loans require the borrower to pay the following mortgage insurance premiums. Upfront mortgage insurance premium. This is 1.75% of the loan amount to be paid when the borrower receives the loan. The premium can also be rolled into the financed loan amount. Annual mortgage insurance premium. This could be 0.45% to 1.05% depending on several factors like the loan term, the loan amount, and the initial loan-to-value ratio. This premium is paid monthly. FHA loans have 15 and 30-year terms with fixed interest rates. Borrowers won't always have to worry about the insurance mortgage premiums. FHA mortgage insurance premiums will be cancelled after 11 years if the borrower is able to stay current with payments and finance up to 90% of the property's value. With an FHA loan, you can borrow up to 96.5% of the value of a home. In some cases, it would be less. However, the down payment ranges from 3.5% to 5% of the loan amount. FHA mortgages versus conventional mortgages. Unlike FHA loans, conventional loans aren't insured by the government and require borrowers to meet strict credit and income requirements. However, there are conventional mortgages backed by government programs like Freddie Mac, but they still have the same strict requirements in place. FHA loans offer more flexibility, allowing low-income earners as well as those with incredibly low credit scores to get approved for a mortgage. Minimum credit score 500,620, FHA mortgages, 500, conventional mortgages, 620. Down payment, FHA mortgages, FICO score of 500 to 579 with 10% down payment. FHA loans. FICO of 580 and up get a 3.5% down payment, conventional mortgages, 3% to 20%. Loan terms, FHA mortgages, 15 to 30 years, conventional mortgages, 10, 15, 20, or 30 years. Mortgage insurance, FHA mortgages, upfront mortgage insurance plus annual mortgage insurance for either 11 years or the life of the loan. Conventional mortgages, no mortgage insurance required with 20% down payment. Down payment assistance program, FHA mortgages, yes, conventional mortgages, no. Interest type, FHA mortgages, fixed rate, conventional mortgages, variable rate, fixed rate. Residence, FHA mortgages, only be approved for the purchase of a primary residence. Conventional mortgages can be used to purchase a primary, second, or third residence. Types of FHA loans. FHA offers traditional mortgages as well as several other loan programs offered by private lenders. Home Equity Conversion Mortgage, HECM. The most popular type of reserve mortgage program, allowing seniors or older homeowners age 62 who own their homes to withdraw a portion of their home's equity. The funds can be withdrawn as a fixed monthly amount or a line of credit. It could be a combination of both. FHA 203K loans. These FHA loans are targeted at borrowers looking to renovate a home. It allows home buyers to purchase a home and renovate it with a single mortgage. Homeowners can also apply for the program to refinance their existing mortgage. FHA Energy Efficient Mortgage, EEM, program. Home buyers looking to purchase homes that are already energy efficient, such as Energy Star certified buildings, can key in on this program. It can also be used to buy and remodel older homes with energy efficient updates. FHA Section 245A Loan. This is also called the graduated payment mortgage, targeted towards home buyers whose income will increase over time. When you go for this program, you can start with smaller monthly payments that gradually go up. There are 5 plans available, allowing for maximum flexibility. Pros and cons of FHA loans. FHA loans are a great opportunity for first-time homebuyers and homeowners looking to purchase a primary residence but short on money to pay the high down payment required by conventional loans. It is also great for homeowners with bad credit, allowing them to get better loan terms than they would without these loans. However, while FHA-backed mortgages come with a long list of benefits, there are also several limits and responsibilities to watch out for. Pros of FHA loans. FHA loans offer the lowest down payment requirements for low-income borrowers and those with terrible credit. With a credit score of 580 or higher, you can get the minimum down payment of 3.5% on an FHA loan. If your credit score is between 500 and 579, you would be required to make a 10% down payment. If you decide to pay more, you will be given a lower interest rate, which would save you more money in the long term. With conventional mortgages, the money for the down payment would have to come from your income or pocket. However, FHA loans allow you to make down payments from a gift from a friend or a relative. Not only that, you are allowed to participate in local down payment grants and loan assistance programs offered by FHA borrowers. The debt-to-income ratio, DTI, measures how much of your monthly income you will be using to pay off the loan and other debts. The higher the ratio, the riskier a borrower you will be. With FHA loans, the DTI ratios can be as high as 43%. Cons of FHA loans. Strict loan terms. The FHA restricts the amount you can borrow, which depends on your location and the size of your home. It is possible that you won't get the best rates in your area for a one-family home. Mandatory FHA mortgage insurance, MIP. The MIP on FHA loans could be up to 0.87 of your loan amount, while there is an additional upfront mortgage insurance premium of 1.75% of the loan amount. FHA loans are targeted at individuals who would otherwise be unable to afford to secure a house, and as such, only borrowers looking to finance the purchase of a primary residence are eligible to apply for an FHA loan. This means you can't use an FHA loan to purchase a second home, flip, or rental property. FHA loans can only be used to purchase homes to meet the FHA safety, security, and sound list regulations, which could limit your options. How to qualify for an FHA loan. To qualify for an FHA loan, home buyers must meet the following lending requirements. FICO score of 500 to 579. Borrowers must have a FICO score of 500 and above to qualify for an FHA loan. Must possess verifiable employment for the last 2 years. Loan must be used for a primary residence. Property must be FHA approved or appraised by an FHA approved appraiser and meets HUD property guidelines. Monthly mortgage payments must not exceed 31% of the gross monthly income. All debt payments, plus mortgage payments, must not exceed 43% of your gross monthly income. However, some lenders could allow a ratio of up to 50% in some cases. Borrowers that have experienced bankruptcy would have to wait 12 months to 2 years to apply. In the case of a foreclosure, the waiting time is 3 years, though lenders can make expectations on waiting periods for borrowers with more promising circumstances. How to apply for an FHA loan. Find a HUD-approved lender that offers FHA loans using the agency's lender list. This should help you find qualified financial institutions in your area. Take note that some lenders may have additional requirements, especially in the area of credit score, that will have to be met before being approved. Once you've selected an approved lender, you can take and fill out their application form. You will be required to provide information on pay stubs, old tax returns, bank statements, and more. The lender will also take note of your debt-to-income ratio, credit score, and credit history. Before settling for a lender, you should always check with as many lenders as possible. Request quotes from as many lenders as you can and compare loan offers to ensure you're getting the best loan terms and mortgage rates. Search for down payment assistance programs. Many states offer down assistance programs to help low-income earners purchase their homes. There could be programs targeted at first-time home buyers. You can make use of these programs to get the funds required for the down assistance payment on the FHA loan. FHA loans FAQs. Is it hard to get an FHA loan? FHA loans generally have an easier application process than conventional loans due to the lower requirements. However, the application process usually gets tougher for those with a very low minimum credit score. Some lenders might require that you have something higher than the FHA minimum of 500 to get approved. Can I refinance an FHA loan? Yes. You can refinance your FHA loan and turn it into a conventional loan. However, you would have to wait 7 months after closing the original loan before you can be permitted to refinance. You can also refinance your FHA loan into another FHA loan. This requires that you pay the original mortgage for 6 months. Can I get an FHA loan with a credit score of 500? While the minimum credit score requirement for an FHA loan is 500, it would be tough to get a lender that would offer you mortgage with such a credit score. Also, you would have to commit to a higher down payment requirement of up to 10%. Who can qualify for an FHA loan? While FHA loans are targeted at first home buyers with low income, anyone can qualify as long as they meet the FHA requirements on credit score, down payment, and debt-to-income ratio.